this video, I'll take a look at the head and shoulders pattern. This is a pretty simple pattern to identify. Doesn't happen all the time, but it is a reversal pattern. It's a bearish pattern. So generally what happens is you have an uptrend. And as you are going along, you get the occasional pullback, and that's something that you would expect. I mean, no market goes straight up in the air forever. You continue to go higher and you make a higher high, which is exactly what you expect in an uptrend. You get another pullback, which might be a little bit more aggressive. And then eventually, you turn around, you go back in the direction of the overall trend. However, this time, the high does not make a higher high. You have shoulder, head, shoulder, hence head and shoulders. So what this means is everybody that bought up here could be losing money. So what happens now when you break what is known as the neckline? That is where these peaks meet. They do not have to be at the same price. They can be tilted in either direction. But what happens is the people that bought here are losing money. But once you break this to the downside, everybody in that entire area is now losing money. This is a very negative pattern, and there's even a measuring stick built in. So the top of the head to the neckline is what you aim for on a breakdown. You put your stop loss on the other side of the final shoulder and let it go. So again, this is a continuation pattern so far. We pull back a little bit, we go higher. Everybody's happy, that's bullish. We sell off a little bit, but this time we can't quite make another high, and that shows that something's changing. And once everybody starts losing money, they get out of the market. So let's go ahead and take a look at an example here. Go ahead and clear the chart here. So right here would be the neckline of a head and shoulders pattern. There's your high and there's your neckline. You're connecting these two areas. So on a breakdown below there, you are looking to short. Go ahead and get this maybe a little cleaner there. You have a stop loss there. And you let it rip. So the measured move is actually going to be down to here. So there's a couple things, and the reason I chose this pattern is because it shows you a couple of things. Number one, it shows you that we don't go straight there necessarily. It also shows you that keeping your stop loss here keeps you safe. It also shows that this area here that was the bottom of this pattern, which was support, is now offering resistance. With this, you have a pretty sizable move. And in fact, once you tagged that move, that target, we basically turned right back around and rallied. It's kind of a perfect setup if you think about it. Again, it doesn't have to be a major trend change, but it certainly shows that we're going bearish for the time being. Having said all of that, it's paramount that you wait for a close below the neckline. That is absolutely crucial. So, I mean, some traders may be a little aggressive and try to short just below it, but waiting for the close can save you a lot of headaches.